Hello, welcome back, guys. So, China seems to be continuing its obedience exercises, and we are having some more lockdowns, supposedly for zero COVID reasons, which is, of course, nonsense. But this has really impacted the Chinese economy and keeps pretty much crashing them all over. And you will see here that there has been some outcry because Chinese lockdown traps residents during earthquake. It's absolutely insane what's happening there. People were actually killed because they couldn't exit because of COVID restrictions here, and that is absolutely amazing that things of that sort are happening in this century, frankly. But you will take a look at this one as well and see that Chinese cities are asked to lock down in show of loyalty to Xi's zero COVID strategy because it doesn't make any sense otherwise, of course. They keep locking down cities, Chinese cities, 300 million people under that lockdown, it looks like is the case, and pretty much decimating the overall economy and empowering people here. So there is nothing to be gained. I mean, right now the most recent strains of COVID are basically the flu, and while China is insisting that zero COVID is saving lives, that is of course nonsense. For the most part, it's actually killing, destroying lives under this regimen, and it's obviously an exercise in obedience and loyalty. There's nothing more to that. But the thing is, in terms of Alibaba, the thing that was interesting to see is that the US and China are one step closer to preventing stocks like Alibaba from delisting. And this is something that, of course, we're going to be watching. And we are expecting some inspections to be happening over here. Inspectors are set to arrive in Hong Kong in mid-September, shortly after which all audit work papers requested by the PCAOB must be available to them. And of course, they will happen. There will be an on-ground inspection. Now, there is uncertainty, of course, around the implementation. We'll see how well that ends. But this has been a very, very nice stepping stone towards resolving this issue. Now, the stock hasn't really responded very well because of what has been happening in between. A crash in the U.S. markets, pretty much, because of pretty much Jerome Powell crashing the markets, Jerome Powell. And also the fact that China kept locking down people, pretty much continuing to decimate their own economy and following their agenda. Now, regardless of this one, as a long-term investor, you ought to be looking to be buying the companies and the stocks that are actually cheap and valuable. And while these things are going down, it's very, very easy to be scared and thinking that this will continue going down forever. But, as an investor who wants to be buying into non-hype situations, this may be an interesting opportunity. And as I've mentioned in the past, this is one of my core holdings. And I have actually bought at sub 480s or something of that sort. I think it was like 85 or something of that sort when I bought my second lot. And if it keeps going down, I think I may even add a little bit more. But it would have to go down maybe to near 70s or so. I don't know if that will happen. But if this, if this continues and the financial situation of Alibaba doesn't change, then it becomes extremely cheap, and it's already super cheap over here. Of course, there is some risk. We have talked about it, but there is no gain without risk anyway. And you will see that the P ratio is a little bit elevated. That's because the earnings of the company were not the greatest last year. That's not expected to continue. We have talked about it in previous videos in much more detail. But what is important is the price to free cash flow ratio, which points to a company that is making tons of free cash flow compared to what it is actually valuated at right now. And this is something to absolutely like here. The outstanding shares going down, and the company will be buying back some shares. I hope in the future it only makes sense to for them to continue some of their buybacks here and add some to their treasury stock, because it's getting way cheaper right now, and it's almost impossible to ignore as this has been going down here. Now, in terms of the revenue growth, the net income growth, they had the slump with the net income, which we expect them to recover from pretty much fully. Revenue growth has been pretty much going upwards, free cash flow growth also going upwards. Same thing with the total equity growth as well. It's a company that has been growing massively well. Of course, their margins have been going down recently, and that is a big problem. But again, this is something that we don't really expect we do not really expect to continue for the many years to come, of course. It's sort of like a temporary situation, and we know that Alibaba has been slacking because of what has been happening. Remember, insane supply chain issues, insane issues in China, pretty much the government themselves not allowing China to operate at all. So you cannot really expect these companies to continue doing as well as they were doing in the previous years. Regardless of that, they have the name, they have the brand, they have the infrastructure and pretty much everything put in place to continue operating the way they should be operating, if not for the Chinese government pretty much destroying them. And this, I think, is something that is going to be temporary. As I mentioned in the past, I think it's part of an agenda that China has right now, and I'm fully expecting it to recover, maybe in a year or two. We'll see how long that will take. And what we do want to see is the financial statements, of course, which does to give us some information here in terms of what the company has been doing, which you can kind of see that the revenue has been pretty much skyrocketing through the years, and it really makes no sense that this company is going down so much in value. But again, it was a great buying opportunity for me, so I'm not really complaining. 10 billion to 22 at some point, and then they did almost 10 over here. This was a slump that they had. Again, we have talked about it, and it's very, very understandable in this current situation. A company that has a total equity of 170 billion, pretty much a powerhouse in terms of the amount of money that they are storing over here. They're doing really, really well. In terms of the total liabilities, which is debt and everything else that they owe, pretty much 97 billion over here. And if you take a look at their cash flow statement, they're doing about 22, 28, like 30 million. So it's about 1/3 of their cash flow of their liabilities, pretty much, that they can actually fund using the last year's free cash flow, which is pretty neat. It means that the company is very solvent over here. And in terms of what they have been doing for their operating cash flow, 35 billion here, 22 over here. Again, there has been a decline in terms of last year, but that can happen again because of what has been happening worldwide and in China, of course, to be expected. And the investing activities, minus 31 billion here, investing in capital expenditures for the most part here, as you'll see. And the company is also financing some, actually paying back some debt over here. And in terms of, again, free cash flow, 22 billion. Now, if we take a look at the stock evaluation tool, we can kind of discover what price it makes sense to be paying for Alibaba, and that is very, very important right now, as the stock is probably going to be at about $90, if not less than 90, once the market opens up today. Now, the revenue growth that the company has been generating in the past few years has been very high, near 40%. We do expect them to actually go down a little bit in the upcoming years, maybe last 1 or 2 years, depending on what China does, of course. But I'm going to go low for this reason. I'm going to go 8, 10, and 12 for the growth that the company will be achieving in the next 5 years, on average, that is. And it may be more, potentially. It may be less in the first 1 or 2 years because of what has been happening, but then it may pick up again. And I wouldn't be surprised if we see maybe even 20% in 3 years from now, or 25, or even more. We'll see, of course, what's going to happen, but these projections, I think they make sense. Like 8%, I think it's pretty conservative here for whatever situation we're going to be looking at. Again, this could even include some, maybe even a negative year, which could happen. Now, in terms of the net income margins over here, the company's net income margins have been going down, but again, this is a situation that has happened in pretty much the last year because of not allowing Alibaba to operate, pretty much. And over here, I will be going to somewhere that is more logical for the company. Something that is near 20% is what makes a ton of sense for Alibaba here. So I'm going to go a little bit lower, though. I'm going to try lower. 15, 17, and 20 is what I'm going to be trying. And the free cash flow margins that I'm going to go for is, again, typical 90, 100, 110. They do more than 100 in most situations. So 90, 100, and 110 makes a ton of sense. Annual return of 13%. What are we getting out of these calculations here? And even for these pretty conservative calculations here, our low is sitting at $127 over here, way higher than our current price. So it's all in the green. And as an exercise here, you can kind of see that if I go super low, and I let's just say that I want to assume that the company will stay that low in terms of net income margins, because I don't know, there is too much competition. This is I don't think these are going to be their margins, but let's just try that 7, 8, and 9 here. Let's see what we're getting out of these margins. And so for these margins only, like 7%, 8%, we're looking at some red values over here, like 59 and 82. And even for a 9% margin, we're still sitting at 110 here. of course, the margins play an important role because they translate to cash. And so as they go down, it's not great for the company. But again, this is probably a one-off. More than likely, the company is going to be continuing at much, much higher margins. And so let's just say that they do retain these normal margins, which probably will be near 20%. But let's just say that they stop growing. Let's just say that they have negative growth, minus 10, 0, and 5% here. Let's just try that as well. What's happening in this situation? With a minus 10% revenue growth, it is only then when we're looking at a 557 in terms of a price today. And at 0%, basically the company not growing at all, we're looking at $114 over here. What at 5%, we're looking at 183. So as you can understand, the company is super, super cheap right now. And of course, last year has affected the whole valuation. And you can actually have it as part of a scenario that the company will continue doing this kind of performance here. But this is probably more than likely not going to be happening for the upcoming years. Of course, you can take a look at analysts' estimates potentially, see what they are thinking about this. But I really don't expect this company to continue, having the same type of performance over here, especially since their revenue has been growing tremendously well, as you can see. So some of of the one-offs that have happened with the company, and some of the some investments that they have lost money on, is things that we have covered in the past. And also, again, the fact that the Chinese government hasn't allowed them to operate, pretty much had them not do very well. But overall, as a business, even growing at 0% with a 17% net income margin, we are still looking at a very, very comfortable buy over here. And so this is why I think this company is definitely a buy, and this is why I hold this one. And I think there may be some roller coaster coming our way, continuing to come our way for the upcoming months or maybe a year or two. But overall, as a long-term hold, I'm very, very positively thinking about this one, and I think it's gonna do well over the long run. But do let me know what you think about Alibaba, guys. Leave a comment below, and remember to like and subscribe if you are not a subscriber already, and I'll see you in the next one. Meantime, take a look at the video that I made earlier about Google, an interesting one, and about another great company worth taking a look at. And thank you for watching again. Bye bye.